Will he or won't he? Is this the week when Spanish Prime Minister Mariano Rajoy formally requests aid for his country? Welcome to this week's Euro Crisis Watch. I'm Jamie McGeever, and with me in the studio is Stephen Major, Global Head of Fixed Income Research at HSBC. Stephen, good to see you again. Well, will Spain formally request aid this week?
Well, there are some dates in the calendar to look out for, Jamie, because at the end of this week, there's the report on the audit for the banks, that is. And also, I believe there's a ratings action, or not, as the case may be, due from Moody's, who already have the lowest rating of the three big ones. So people are looking for that, and then in October you've got ECOFIN and the Eurogroup and the European Council all meeting in the middle of October.
Rajoy's holding off though, isn't he?
Well, yes, the problem for the market is that the longer they hold off, the more potential systemic risk there is. In other words, potential risk to the euro and everyone collectively. The sooner they go, then the more risk there is to Spain, because the likelihood is their liabilities go up and therefore their rating goes down and the spread could go out and require some intervention. So that's the dilemma. And of course it's all about sovereignty. Rajoy doesn't want to lose control over things like unemployment benefit. It's quite fundamental. So will he or won't he? I guess he will, and sooner rather than later.
And will it be a full-blown ESM/EFSF bailout backed by the ECB, or will it be something of a halfway house?
It's something in between, and you know, a month or so ago we had a whole range of potential programs, and the market has simplistically assumed that there would be secondary market intervention, which there is now on offer via the OMT from the ECB. But inside the EFSF guidelines, there's a whole bunch of programs. Some of them are quite complicated, and it's not a simple case of the EFSF just issuing bonds to help a country or giving loans. There's the primary market purchases, which is designed for countries like Ireland, trying to get off a scheme, really. But there's also the precautionary program, and inside that, a couple of iterations of it, which are basically credit lines to give Spain enough money at probably EFSF or swap rates to get it through to next year.
So it's a kind of insurance policy?
Well, yeah, if in a way they won't need to draw it if the credibility of it and the ECB mean that their spreads come in. I don't know what they're doing issuing 10-year bonds at 5 3/4, by the way, but that's a choice that they've actually made.
You think they should be borrowing much shorter?
Well, yes, but the trouble is they're probably constrained there as well, because the MOU that will be signed up sort of has anti-gaming rules in it. And in fact, there should be a sort of gentleman's agreement about this, because otherwise everyone will be doing it.
Yeah.
So
OK, not only do we have those dates that you've mentioned, we've got the Spanish budget on Thursday and the French budget later in the week too. These are quite big events this week. What, for you guys in the market, will be credible in terms of growth forecasts and deficit targets?
These budgets are very important because they have to get signed off in October, and by December we'll see the bond calendars for next year. But what really matters is the question of debt sustainability. And I'm just hoping for once that there'll be credible forecasts, because systematically for 5 years or more, as long as I can remember, the European Commission has had growth forecasts that have been too high. And in fact, that's not just the European Commission. The consensus economics profession has been over-egging growth expectations. I don't know what it is. Everyone seems to have this sort of V-shaped mentality. Maybe at last, having been beaten up year after year, we'll have a realistic growth forecast, which is -1% for the Eurozone on the whole. If we get that, then there's more chance of an upside surprise, isn't there? And also...
It's a big gamble to come out with a pretty gloomy forecast.
Well, it's also very dangerous to have a pretty rosy one. The reason being, you've got debt breaks and fiscal compact, six-pack, two-pack. All of this is now enshrined in law, and then also we've then got the carrot and stick issue. ECB and European Commission, do they withdraw the carrot or start wielding the stick, or use both? So the problem there is the objective is to have a credible forecast, so that actually they don't need to threaten. Yeah.
OK, just to finish up, I mean, we've also got big holes in the Greek deficit targets.
Yeah.
Germany's pouring cold water on the ESM, etc.
Yeah.
But do you think we'll look back at September and think, OK, this may be the month where the crisis started to turn, the beginning of the end, if you like?
Yeah, through July and August, the skeptics were looking at September as a good reason not to trade. because there was so much event risk, and so they didn't do anything. They sat on their hands. They missed the biggest rally we've had for a while, and October's a notorious month, but I don't think anything's going to happen. The point is looking for the wood through the trees, and also understanding that Germany is accepting a certain amount of debt mutualisation at a tolerable pace. That's what's really happening. Germany is accepting Greece doing what it's doing. Germany is accepting Spain. And that's the big issue. It's okay for the biggest creditor nation, and so the game goes on.
Okay, Steve, thank you very much. That's it. My thanks there to HSBC's Stephen Major. For more on what's moving on financial markets and why, tune in to Market Pulse. That's every weekday at noon London time. I'm Jamie McGeever. This is Reuters.